Kirti ma'am, you may start, please.
Good evening, participants. Thank you for joining here today in the evening, taking out your precious time to attend. Good evening, participants. Thank you for joining here. I am here. We are having the topic. I am introducing Disha Shah. Who she is a partner at she is a partner with a very reputed firm. She's working in governance, risk, and internal control. She has got all India rank of 50th in PCC examination. Disha Shah have got 12 years of experience with reputed firms like EY LLP, Mazare Business Advisory Private Limited, CNK. She has worked in risk assessment, process engineering, internal audit, and internal control assessment, SOP preparation, and all ERP implementation. She executed and successfully delivered data analytics project during her tenure with the employers. She has along apart from this, her key area of practices are financial audits, internal audits, risk registers, and risk based reviews. She has worked SOP preparations and process reengineering. Her basic main area of practice is internal audit, financial due diligence. Also, she has done from post merger and acquisitions. With this brief introduction, I am introducing here in front of you Miss Disha Shah. Disha madam, floor is yours, please.
Thank you so much, Kirti, for the very detailed and brief introduction. Uh, should I start sharing my screen?
Yes, you can start.
One second. Is my screen visible? Oh, okay. So while internal audit is a very vastly growing and fast-growing uh, stream of working currently, I mean, today I'm going to speak about what are the expectations. So, one is getting a particular project on internal audit, and the second is meeting the expectations with which this audit is executed, and the ultimate customer and the management of the organization is satisfied with the requirement. So that's again, starting with a project is one thing, and being able to deliver value addition and being able to deliver a satisfactory report to the management at the end, which the company and organization, including the multiple stakeholders, which will be involved in this particular. Who are looking forward to the reports that we need to, we'll be delivering at the end of the project. Needs to be, I mean, if they feel satisfied that all our hard work is worth the pains that we take as internal auditors. There are multiple roles and expectations, and in this never ending and ever changing environment, the demands and the expectations with internal audit has been ever increasing. So going back to a decade where the internal auditor reports uh, were not, made responsible for a lot of answering and a lot of questioning at a later stage. If we look at the history and the change of roles and responsibilities and the expectations of internal audit that has, changed over the last decade, we understand ever increasing reliance being placed on the report and ever increasing expectations from the report. So today we are going to speak a little more about, understanding these expectations and how to overcome it, so that we are all able to add value and retain the reputation and the good work that we are all doing currently. Now, to start with, if we start with the objective of uh, internal audit, these are very well known and basic objectives, like evaluating a company's internal controls. By the name, it goes internal audit. It is way beyond, the financial audits. Yes, financial audits are a part of the review, but we as internal auditors look at, a lot of things over and above the financials of a particular organization. So we don't stick to the P&L and the balance sheet of an organization. Of course, we look at the impact on these statements, but we also look at a lot of things, including the processes, the effort estimates, whether the ethical values, the code of conducts, uh, the entire process flow, whether there are improvements in there, whether there is duplication of work, whether we are able to identify some improvements in terms of better processes in the markets, that the best industry practices are prevailing, whether the company, the organization is using those and all. Other than that, whether the organization departments are functioning as per the expectation from them by the management. So we do a lot of juggling between a lot of expectations. We have multiple stakeholders. We are answerable to the management, to the audit committees, to the CFO's office, to the CEO's office, and we are going to as we go through the presentation, we are going to go through this in detail, taking each a closer look at each of the expectations and the practical aspects and challenges that we face with the solutions in and around it. So I hope I'm able to add a lot of solutions that all of us are facing in a daily changing world. Now, the organizations also expect us uh, to bring out the perspective, looking at multiple things together and giving them a sustainable solution. For this, our understanding of the industry, our understanding of the processes, and our understanding of the governance of the company, all this put together, it adds a lot of value, and then we'll be able to project a better perspective to the management. So, the internal auditor is, I mean, we always term it this way, that we enter an organization, we work with the teams from the ground level till the management. We interview multiple people. We interview and understand what are the expectations at various roles, and then we kind of draft a structure that is sustainable for the organization at various levels and in multiple forms. So it's a very big responsibility, um, in a very nutshell, which is termed as internal audit. Now, moving ahead from the objectives, the major responsibilities which are defined under various statutes like Companies Act, the SI, the Standards on Internal Audit. There are a lot of guidance notes available from the Institute of Internal Auditors, etc. Now, these are the basic filters that the organization will expect us to comment on, basis, our presence in the organization. From risk management, if there are any major risks open in the open in a particular area. Now, by risk management, we also talk about the existing and the the increasing risk as and when there are changes in the external environment. So, say for example, if with the shift to the cyber and the system-based universe that we are rapidly seeing across the organizations, there are, from smaller to larger organizations, we see that people have started shifting from the older systems to automated systems which give better controls in place. The risk of cyber security, the risk of leakages of data, the risk of dependability on the system, all of these have increased. And it is, as a part of internal audit, it is our responsibility to draw attention of the management of the organization towards these areas. Now, for example, a lot of times when we are projecting some risk or we are discussing this risk issues with the particular uh, management, a cost factor is inferred. Now, I'll just give a small example here. One of my own clients, it was about a 600-700 crore retail outlet owner organization Okay. Now, when we had identified that, your data security controls or your data security management is very weak, they had said that no, it is, and we had offered that, we'll do a detailed check of the, what is doable in the system, what are the improvements that you need to bring in, so that this entire uh, thing is taken better care of, and you will not have challenges in the future. That time the management was very reluctant on the costs that needed to be spent, and they decided that they'll go with the risk. It was a privately owned company, so the management, the board approved the risk taking up appetite of the organization, and we closed it at that. A few months later, the organization was hacked by unethical hackers, and they had to pay three times the cost of implementing the security configurations in the system to release their system. And for 1 or 1.5 months, the systems of the organization were completely down. They had uh, absolute no control or visibility of what was being sold from the retail outlets, what was the stock lying at various outlets, what was being measured, not measured. They had no visibility at all. So this is the perspective that we have to bring to the management, saying that prevention is better than cure. That is the most basic funda that internal audit proposes to a client, that it's better to have controls in place right from the start, rather than having a fallback later, which would result in a lot of hassles and a lot of losses to the company in the future. So this is a small example of had we not pointed this out, it would have been a back foot for us also, saying that if you've not been able to give me the basic uh, out view on what should be there, I would have done it at that time. That is how the management would have come back to me. But because we did our job right in time, and it was the management decision not to go ahead with it, I think we are also at a better place in from within that. No, we did our job right, and then it was the management to decide whether they would want to go ahead with it or no. So that is how all the expectations and responsibilities and roles will interplay with each other as we talk about this more in detail. Other than risk management, we also have to look at the control assessment. What are the controls placed in the system? How are it being whether it is effective, ineffective, whether it is functional, non-functional, all that while we do the internal audits across the departments, we are expected to look at governance and ethics. So, what is the code of conduct of the company? What is the governance top-down approach? How is this going to be overall looked at by the company, whether the required documents are there, policies are there, whether the the required compliances are complied by the company, if there are any changes or updates in the compliances, etc. Operational efficiency, there are policies, that there are systems, but whether it is actually acting and behaving and used in the way it is expected to be. And fraud detection and prevention, again, if there are any red flags coming out of probable frauds, that is our responsibility to highlight to the organizations in time, and then it is for the management to decide whether they want to deep dive into the investigations or have a different approach towards it, whether they want to go with an internal investigation team, whether they want to hire or external investigation team. All that can be decided by the management itself. But these are the basic responsibilities defined under various statutes, expected where we are need to comment on in the report and given. Now, other than this, we also have stakeholders. So, what are the stakeholders defined under various, statutes like Companies Act, Standards of Internal Audit? Then there are, guidance notes from the Institute of Internal Audits, etc. We have CEO's office, we have CFO's office. Now, when we talk about CEO's office, he looks at the overall risk management, whether there are any unforeseen risks lying in the changing environment, which is now applicable to the company. Like when this MSME, rules came in, it was applicable to a lot of companies and it was new for everybody. So that's where we step in as internal auditors, where we, explain them on how the change management needs to be taken care of, what are the due dates, if there are any applicabilities of particular laws to a particular company, and whether the company has identified it. If they've missed out on it, we have to point it out to the companies on a timely basis, so that the companies can save on their overall penalties, etc. Because a lot of times, if there are changes, so in industries which are governed by institutes such as SEBI, RBI, there are circulars coming in every now and then. There are lots of changes happening over the period. On multiple circulars are being issued. Now, when we are servicing an industry which is relative applicable for that particular statute or that particular circular that has come in place, it becomes our responsibility to highlight it to the particular uh, management, saying that you need to have a plan. For example, a year back, the audit trail was made mandatory. Now, at that time, even if IT security and IT management would not be in the scope of our audit, the management will expect us to go and tell them that even in internal audits, we will require to comment on the audit trail applicability, and whether the systems are configured to comply with the audit trail requirements under the Companies Act. And this is the expectation that the management will have from us. Now, when it comes to audit committee, the committee members of, the audit committees are majorly focused on the governance and overall, the performance of the company during the course of audit. They are the ones who would want to know if there's some unethical practices happening in the company, whether there are any bypasses of the rules that is being approved, without the knowledge of the stakeholders, without being reported to the board, etc. So other than the board of directors report, if there is something that should have come to the desk of the independent auditors of the audit committees, then whether that has happened properly in time or no. So we are like the insider, the team that works between the organization and the audit committees and the giving them assurance and comfort on whether the processes and policies are being followed as expected. When we talk about the CFO's office, the CFO's office is focused on the financial health, whether the timely cutoffs are happening, whether the accounting, whether the error rates are within the defined tolerances, etc. So these are the various expectations. Each stakeholder has a different expectation from the report. And when we are doing the same audit, we have to keep all these expectations in mind, because it's our responsibility to cater to all of these particular this thing, all of these particular stakeholders. Now, other than this, the functional departments. When we talk about the functional departments, we talk about the people, the departments that we are auditing on a day-to-day basis. Now, their expectation from us is understanding the practical aspects of, the processes. So having checklists and having SOPs in place is one thing. But when we talk about, practical possibility of complying with audits, practical challenges that they would have found. So say, for example, if the systems were down for a week for whatever reasons, and there was a lapse in a compliance requirement that would have been required, then we have to take a note of such instances. And if we know that a particular department is short staffed, because of which there are multiple delays happening, then I think a comment from us to the management, including identification of the delays, should also be that we understand the team is short staffed and the management needs to look at restructuring the team or adding people. So It has to be a very practical and understood approach that should go to the particular report with to the management, so that the balance between the function expectations and the management expectations are well met. Having said that, when we look at reporting, we need to also make sure that the reporting is unbiased and complete reporting happens. So whatever observations are observed need to be reported, and there has to be a uh, structured process and methodology followed at arriving at these observations. Now, when we talk about so the stakeholders defined under the statute are the stakeholders which are known to everybody. Other than this, we have a lot of invisible stakeholders. Invisible stakeholders meaning there are people we do not directly report to, but who would look forward for the internal audit reports on a regular basis to have a reliance on what the company is really doing. So there are a lot of customers, a lot of organizations, the multinational organizations, and a lot of other vendors who rely on the internal audit reports, the certifications of internal auditors on particular process reviews or compliance calendars, which are reviewed by the internal auditors on a regular basis to have their reliability on this functionality and clearances on the system of the organization they are trying to onboard. So, these are the people who rely on the report of internal auditors for their further assessment, and that increases the responsibility of the internal auditors in terms of reliability and uh, the performance ethics for us. Other than that, we are now responsible to a lot of regulatory bodies like NAFRA, there are SEBI notifications you receive in cases if the exchanges, all these various stakeholders have a lot of questioning that comes to us basis our reports in the past. So while we might be doing some execution of some reports right now, we always have to keep in mind the expectations from the both the statutorily nominated stakeholders plus the stakeholders which have other than which are other than the stakeholders we are directly answerable to, because that will also add a lot of responsibility and reputational risk to our work performed. Now, internal audit is usually conducted, and we call this as the pillars of internal audit, the 5 C's. The 5 C's include the criteria where we identify a particular issue is identified by the management, and a audit is requested. So this could be for the special purpose audits or the process audits where the management feels a need uh, for evaluation. It could be a periodic evaluation. It could be a specific evaluation basis, some technical issue or some challenges faced by the management on current basis. So one is the criteria. The second is condition, whether there is any deviation from the expected standards or policies. What is the issue? So this needs to be understood before we take up a particular project. And what is the cause of a particular audit to be done? Like whether there are any revenue leakages observed, whether we've ended up having all executed fraud or identified fraud possibilities, etc. What would be the consequences of a particular review? So if we know the destination, we'll be able to reach that faster, and our focus will be on reaching at the destination without any disturbances and deviations in between. So that will also help us identify that that will also help us identify on what are whether the practices that we are following are adequately suitable for the expected outcome from the management, and the corrective action. What are the practical steps the management should take? What are the practical steps expected to be taken by the management, etc. So these are the, this covers the entire methodology of internal audit that is required to be done. So this, in a nutshell, explains the entire purpose of the internal audit. Now we talk about the basic hygiene essentials. While we are talking about the various expectations, and we are talking about all the multiple roles that we play, the basic of audit still don't change. As internal auditors or stat auditors, if we are required to be independent, that independence still has to be maintained. You may support the management, understand their perspective, their expectations out of a particular audit, but the independence cannot be compromised. So these basic essentials, like the technical expertise, you at all times need to be being the experts in various domains. We need to have the expertise, the required technical infrastructure, the required uh, support in terms of, if we are doing some IT audits, then we need to have IT specialists in place. We need to have that kind of infrastructure. If we are doing some due diligences, we need to have the basic tools available in the market. If depending on the nature of the organization, the project that we are taking, and the organization that we are auditing put together. Now, having said all of this, the confidentiality, when and it becomes even more critical in terms of internal audits, because we are talking with multiple departments across the organizations, and we have to maintain that Chinese wall on what goes out from the internal auditors to the various departments. Because a lot of time it happens that within the corporate politics, within the organization, uh, the information may be misused, right? So we, as internal auditors, from top to bottom, including the junior most articles in the team to the partners, we need to have a strict confidentiality policy where we ensure that whatever has been observed in a particular review with a particular department stays between the internal auditors and the department. Now, if it is discussed with the other stakeholders in formal or informal manner at an organization, it may end up in a serious conflict, right? So these are the basic hygiene essentials that goes without saying, which will be required at various organizations. Now, other than that, when we talk about the changing roles, so earlier, a couple of, I think a decade back, if we put it across, internal audit was looked at merely a tick mark job, which was just a mandatory requirement under Companies Act, and was, done with that perspective only. So it was transactional based, it was sample based. You need to pick up a, defined sample review, and you need to give us a comment on that. But that role has been very fastly and very quickly changing over the period of time, where we have now moved, way more ahead from the transactional focus, from transaction to process to business. A lot of business reviews are now taken up under internal audit, like whether the strategy adopted by a particular organization was apt or no, whether there was a better strategy that could have been taken by the team, whether there was any any better way, any miss out in terms of the business identification, whether what was as per the expectation of the management, whether the business teams are performing in the same value, whether we also look at a lot of times what are now for something like budgets, right? The budget preparation is also reviewed under internal audit, where we say that, if you've gone from 5 to 500 in 1 year, whether the budget was really thought through, before. And then if we, so when we comment on a budget, whether, the variance is justifiable, not justifiable, we also comment on whether the preparation was really thought through, or it was just a tick in the box where we did, we had to do a budget preparation. We did a budget preparation, but nobody really thought through whether it is doable, not doable, whether, the cash flow expectations were as per the budget given for a particular uh, implementation or a particular setup. So it's I mean, what I'm trying to say here is that it's way beyond a limited transactional review or a system review. Now what we are really looking at is whether logically uh, structured, uh, management's expectation, and the process, there is a three-way match or no. We really look at a step beyond the process and transactions review, because even if there is a process and if it is not adding value to the overall expectation of the organization, we also comment on whether the business should relook at the set processes, should reconsider having better processes, or so on and so forth. Other than this, other than the business focus, we also act as consultants, where we recommend the companies to undergo some improvisations in their systems wherever required. The company will also expect us to tell them that if you are the experts as internal auditors, you visit multiple organizations, or within an organization, you speak to multiple departments. What are so not just fault finding. Your responsibility doesn't end at giving a report and the error listing. You also have to provide. They will look at you, to provide uh, the recommendations which are practically implementable. And prevention. So yes, detection of errors is a part of us as an auditor, the roles of auditors, but whether we are able to give them a step ahead, where we can recommend them something that this might happen, and you might not realize it in time because you don't have any control in place to prevent this particular incident. So yes, detection is a part on a reviewed basis, but prevention and improvisation in and around prevention is also an expectation that is held from an auditor. So, I mean, if we look at it all put together, it's a complete shift of role from auditor to an enterprise risk management system. Because with the changing environment, especially after COVID, the focus of the entire organization has moved from just the profits and business to sustainability. Whether I'll be able to sustain, in a difficult environment is what every business holder, every business owner has started thinking. And with the changing times, we will also be required to have this in place. Now, we always term, uh, the roles that we play and the roles that we are expected to play in in multiple things, and it's very difficult sometimes to manage these expectations. You know, so you have to be, stable and in control of what is being looked at, how it is being looked at. You have to balance the expectations of multiple stakeholders. At the same time, you have to be constantly updated with the changing environment in which a particular business is functioning. You also need to adapt and change your technology, the processes, your checking methodology with time and with the change in both internal and external environment of a business. Staying neutral between departments, not being biased to any one particular department, where you end up focusing on fault finding in one department and because you are, probably in good terms and supporting the particular department is supporting you. A lot of time it happens that, the internal departments have a stretch on the same, and diverse areas. So, we need to ensure that over a period of time we are covering multiple areas, multiple diversities, etc. Now, uh, any questions as of now, Aarti? Uh,
Yeah, I'll check 1 minute. So we have two questions here. One is from Mr. Bharat. He's asking which practical aspects are covered here. He might just need to understand what are the areas that we are going to cover with PPT. So I think
Okay.
gradually he'll come to know. Oh, I
Mhm.
don't think that is required to be covered now.
Hmm.
The second question is from again Mr. Bharat, on which organization internal audit is applicable. This is his question.
Okay. So internal audit is applicable for multiple organizations defined under the Companies Act. If we go through the relevant sections, it defines whether, so if your credits, loans are beyond a certain levels, the Companies Act defines that you need to get an internal audit done for this organization. If your turnover crosses, I think, 200 CR, you are required. If you're a subsidiary of a public company, you are required to get an internal audit done. So there's a categorical, clear understanding on what needs to be, what organizations will be covered under internal audit. And the practical aspects, of course, we'll, gradually take this over uh, uh, once we are, starting with the flow of this. But yes, again, while I'll be explaining the roles and responsibilities and the expectations and juggling and internal auditors juggling between the two, I will also be giving synopsis, like I gave a couple of examples in the past, that, practically we faced on different organizations while, conducting audit, which hopefully will help, the audience to implement it in their respective roles. So I hope this answers the questions.
Yeah, very briefly. We
Yeah.
can continue, Disha.
Yeah, thank you. Okay, so now when we talk about the role book, uh, these are the, we let us understand the various roles and and the expectations of various stakeholders from internal auditors for these roles. Now, risk assessment we've already spoken about. Risk assessment is expected from the internal auditor, where, if there is a changing environment, there's a changing statute requirement. There, for example, once COVID came in, everybody was concerned of the data security. When people were starting to work from various locations, accessing systems from across the globe, there were people who were working from one end of the world for a company which was stated in the situated in the other end of the world. So with these environments, what we had never thought, that, entire organizations would be working on a remote basis, started working suddenly within 2-3 months of, COVID coming in. So with the changing environment, it's a constant requirement for the internal auditors to sit back, take a few, take a step back and think through whether we are missing out on anything. Now, earlier, when we had a shift from a hard copy check issuing to the, NEFT and IMPS systems provided by the bank, we had a attack of, cyber crime, where a lot of companies and a lot of organizations ended up having major fraud, either executed fraud, or just saved from a fraud that could have happened. Now again, it is so I'll just give a small example here. In one of the organizations that we were auditing, this is, I think, in the time when we were moving from system, the manual controls of issuing the payments to the customers, to the system controls. Okay, we had recommended that for any change in the vendor masters, okay, there has to be a maker checker approval, and that maker checker has to be from a senior person. So the system had a maker checker approval, but again, there were we asked for a multi-dimensional role approval. So we said that somebody from finance, even if requests a change in the maker checker, IT should have, so ideal, as per the standard practice, IT is an independent body governing the systems of the organization, and the IT department has the sole right to change the vendor master of a particular, especially the banking and such, critical details of a particular organization. Now, I think approximately a year after we got this change implemented in the particular client, the client had a request, a fraud invoice coming in from a particular vendor of theirs, an international vendor, asking for the balance payments. Now, the person who was actually executing the particular payment saw that there is a change in bank statement. He called he called the number on the invoice, and he checked with the particular person, and the vendor said that yes, there is a change in our bank account details, so please get this processed. He tried to change the master, but he could not do it because there was a change in authority matrix for change in the vendor masters. And fortunately, the person who was allowed to change the vendor masters was not available, and he asked for a confirmation from the vendor in writing. Now, when the finance person who was actually executing the payments spoke to the regular point of contact from the vendor, they realized that this particular transaction was not initiated by the vendor organization. So the vendor organization systems were hacked. The fraudster looked at, what are the payments receivable on a larger scale for the particular vendor, and they copied the, formats of the vendor, and from a fraudulent email ID from a fraudulent person, this invoice was sent to our customer for payments. So it was a fraud that got, that could not be executed because of a control that we had implemented some time back. Now, this is the kind of, value add that as auditors we will be expected, and we have been providing to our clients. And these are the times when, the fees that are paid to internal auditors, I mean, the fees was, I think, minuscule portion of the fraud that, we have been able to stop for that particular client. And it was, it was literally millions of dollars that was uh, to be transferred for that particular organization. So, these are the preventional, precautionary actions that the management will expect. And we had a thank you note coming from the, MD of the organization, that we never thought that this could be executed, right? So these are the kind of value adds that as internal auditors, um, we'll be able to provide to the client, and are the expectations from us, right? And other than that, control evaluation, yes, because even if we are not doing an internal control review or a IFC review for a particular organization, if we are doing internal audits, we are expected to understand whether, what are the controls placed in the system, whether maker checkers are actually happening, or it is only happening for the namesake. So these expectations are, placed on us. Other than that, the compliance monitoring, the, changing compliance requirements, ongoing, your TDS, your various compliances under GST. All of us know that, the phase between 2017 until 2022, where we had constantly changing GST requirements, and constantly changing GST laws. There were multiple changes that happened. There were multiple returns to be filed. multiple changes in the returns and compliances, expectations, etc. So we need to be updated with, and we need to have a close review on the compliance monitoring, and governance review will also include, the overall framework, whether there is any password sharing happening there, whether there are multiple logins you find across the employees of the people, etc. A lot of times we feel that maker checker hai, हमने देखा कि approver is so and so, checker is the maker of the entry is so and so, it is it is true, like the maker checker is working. But when you really go to that departments and you see that the same person sits with 10 login details, he is the maker, he's the checker, he's just using multiple logins. This is a practical issue, right? That we've seen across this thing. And this needs to be reported to the management that this is what is happening at the ground level. So, governance will also include the overall ethical compliance by the employees, whether they are sharing the passwords, whether they are sharing the confidential details, whether things are happening as per expectation, etc. Other than that, the advisory roles, the reportings. So advisory roles will talk about, the over and above, uh, the comments on the areas that you have reviewed over and above the error rating. So there could not have been any fallout on a particular area, right? But if you see that there is a possibility that this can be controlled better, that is where you step into the advisory role and you go and you guide the particular client that you know what, this configuration is available in the system. Your there is suboptimal utilization of your system. There are ways of doing it better, so why not go ahead and implement it? Why not explore the better controls which can be implemented in a particular system? Sometimes it also happens that some other organization is using a better process or a better way of monitoring a particular situation. You can always help your client say that I know an organization who has beautifully implemented the same process in so and so way. Why not start with implementing this in your organization? So these are the roles that you have to play over and above just reviewing the financials or a particular transactional value of a particular department. And reporting, again, a lot of times it happens that we find a lot of things, we figure out a lot of things during an audit, but unless and until it is clearly, concisely reported in the proper format, in the proper words to the respective stakeholders, it goes in vain. So a lot of times it happens that the juniors or the preliminary people that you deal with, the people who would be sharing the data, the executive level or employees at an organization may not understand or may not appreciate the risk in in the processes that they're following, in the fallouts that are happening. But the same may be appreciated as the owner of the business, a management personnel would appreciate. So it's a complete judgment on the understanding of the business requirement, on the understanding of that particular how do we term it, the that particular situation, on whether or not a particular observation needs to. A lot of time, practically, there are days when execution of an audit takes half the time of the report closure requirements of a particular audit. But that is a fight you have to take on your judgment, because if you drop a particular observation with not so satisfactory responses, or not a proper judgment on the implication of that particular observation, it might result in some fiasco at a later date. So that judgment as a professional standard ethical uh, 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 advisor or internal auditor is always very, very important in terms. And again, a lot of time it happens that our responsibility ends at reporting. Once we issue the final report, we take the target dates on the action plans, and that's about it. Nobody really sometimes we miss out on the follow up on whether what was supposed to be done, what has been done, whether it has been done sufficing the expectation basis which it was supposed to be done. This three-way matching is very, very, very important in terms of uh, adding value to the client on an overall basis. So when you do audit for multiple number of years, if you do an audit, you report 5 points, you close the audit, and in the next financial year, you find the same observations without any actions being taken on that, then you are not really be able to add value to that particular client. So, understanding management expectations, taking clearances from the concerned people, applying your practical approach to it makes, I mean, it goes a long way. It makes a lot of difference in terms of uh, uh, satisfaction that would come to the client basis your report. Like I said, there are multiple expectations across the stakeholders. The CEO needs strategic high-level oversight on risk management, value creation, etc. The CFO would focus on financial integrity, etc. And all these multiple roles are played by the same team, which is termed as internal auditors. So all these roles need to be kept in mind when we are going through this particular audits at various clients. Now, other than these specific requirements detailed in various stakeholder wise requirements, there are certain implicit expectations that are placed on internal auditors. So bridging the gap between various organizational functions. So like I said, management expectations work at X requirement, and then there is the functional department working at Y. Now, mapping whether what is expected at the management level is really happening at the functional level, and if there are any challenges faced by the functional people in implementing those expectations, whether those have been communicated by the to the management. These roles need to be balanced by internal auditors, because we are we step into the shoes of the management when we actually execute internal audit, and we give a overall review to the management, and we comment on the look and feel of how things look like in a particular organization. Ethical guardian, or again, like I said, the technology improvisations, what is happening in the market, what is happening at various. So we need to be adaptive and capable of commenting on understanding the system, commenting on their advocacies, and uh, also being able to give them a fair perspective on what is doable, not doable, what is a bare minimum that you would require as a technology support in a particular organization. Basis our understanding, our knowledge, and our judgment, we need to keep the management abreast about these facts happening at various organizations and vis-a-vis their own organization. Now, for consultants, we have, as consultant, we need to provide these services to multiple stakeholders. Board of directors have an agenda of whether things are happening in time, whether the error rates are fine, whether the SOPs are being effectively utilized, etc. The committee needs a governance, clearance, whether so there are some bailable offenses, there are some non-bailable offenses where the director of a company would not even know what is happening at the ground level, but if some missouts at a ground level may end up into a prisonable offense for the director. So they are always concerned about whether things are well taken care of, whether things are um properly maintained. And for example, until some time back, the TDS non-compliances were reasonable offense for independent directors, for the directors of the company. Now imagine for miss outs on TDS deductions by finance team personnel if there are notices issued to the director. So their concerns are always more on the governance and uh, these statute requirements, which are very, very critical in a lot of perspectives. And then, of course, the functional departments on whether, the true and fair view is being presented. So a lot of times, between in the fight of what observations we bring to the board and what observations are, practical, and whether these observations should actually be reported or there are any practical solutions available for it or no. So this, balance between our performance and the functional department's performance need to be balanced on an ongoing basis. Now, with these multiple roles and expectations, from the multiple stakeholders, how is an internal auditor able to put this all together in the reports? So we literally, we bring together multiple pieces of multiple expectations from multiple stakeholders, giving them a detailed and understandable view on, what is the scenario and what is the uh, uh, I would say, what is the rating of that observation that we are raising. So here, what we normally do is we give a background of what has happened, what we are highlighting to a particular, what observation is being highlighted to the board or the management on a particular uh, instance, we give what are the implications of that fallout. So what may happen if this is being continued and tomorrow it comes into the notice of some statute, or what will be the implication of this? Whether it will have a overstatement, understatement of my profit and loss, whether it will have a implication on penalties being charged by the statutes, whether it will have a prisonable this thing. So a lot of times, as laymen, the management personnel who are not the stakeholders or not the experts of this thing, not the expert of taxations and the laws, they would not know that one particular fallout may end up a company having what kind of implications at a later stage. We kind of carve that out, that this particular fallout. Say for example, you've not if you've not kind of paid TDSs, deducted TDS and paid TDS in the given time frame, it might actually end up having a director receiving a notice of investigation or prison, and which is very critical. So that rating, high, medium, low, becomes very important, basis the risk implication and the root cause of a particular observation, right? And then we also give them recommendations on how to correct this particular instance and how to avoid recurrence of such situations in the future. So it gives you a detailed review of what happened, why it happened, what may go wrong if this keeps happening, what is the root cause why it is happening, also how can you rectify it, and what is the management ready to do. So by management responses, we take the responses from those particular this thing. So all these areas put together, we identify whether it is a people issue, whether it is a process issue, whether it requires management intervention, whether it requires any reconsideration from the management's point of view, and whoever is taking agreeing to take an action on it, by what time will they take the action, by who will be responsible for this action, so that there is a sense of accountability. And all this put together, if you see, we have literally connected the dots from various expectations we spoke about so far. So this is how the entire data review, we are literally putting the data into stories on what is happening at an organization. Other than that, we also give summaries over a period of time on what are the kind of observations were, observed uh, over the cycles of a particular organization, reviews, what were the high, medium, low. So we again rate these observations basis a rationale, which is defined in the report itself. It could be a value, it could be a process point, important from a process point of view, it could be important from a statutory compliance point of view. So it's a very detailed, structured reporting that an internal auditor gives, which helps the person understand the overall. So something may look very nominal and very simple in terms of an observation. Now, something like the procurement happening of a particular material on incorrect name. But if it is happening on a consistent basis, you need to deep dive into understanding the root cause of it, and you never know, you might end up getting a way bigger issue out of it. So a periodic cycle and the overall observations that are observed over a period of time gives you a good gauge of how compliant and changing the organization's overall control management is. Other than this, we also give, dashboards including the previous recommendations, the audit culture, whether, the company is supportive of the internal audit, whether the data is properly being shared, what are the kind of repeat observations observed, whether the plans are happening as per the management expectation and all that. So this gives a good overview of what is expected, of what is happening at the ground level across the departments, whether we are actually being able to give a fair and practical view out of it or not. Now, other than this, we are also expected to give the benchmarking of best practices. So, with practical solutions. So, you might end up saying that, maker checker is the, standard practice, it has to be there. But if the team who's executing a particular function is a team of two people, and we insist on implementing the maker checker everywhere, then it is technically duplication of work for the organization, which will not be accepted as a recommendation by them. Because if I have only two people, and if both those people keep reviewing the work of each other, I mean, it will not be feasible for that particular organization to implement those improvements. So what we do is we add a practical aspect to it. Now, when you have a smaller team where a maker checker may not be required on a instant to instance basis, we may recommend a maker checker, saying that the senior or head of the department needs to look at this on a monthly basis. So if there are only 15 transactions in a month, then he might end up looking at the reviewing those transactions at the end of the month. This has to be in concurrence with what the management is okay with. So the management's risk appetite becomes our base for recommendations and the implementation insistence. You need to be adaptive, and the applicability needs to be assessed with the costing factor for the organization. So a lot of controls may be good to have, but we have to, we usually look at must-haves that need to be implemented on right-away basis. And then good to haves may be recommended and left to the management's call on whether they would want to spend that additional, cost factor in that particular point in time, or may be okay with, living with the risk of not having the best of practices, but implementing the practices which are suitable for the size of the organization. And the recommendations that a lot of times are being given to a particular organization have to be in line with the sustainability and cost effectiveness. If it is a one-time expense, then it may be the management's call to do it. But we also have to keep in mind the overall classification of the organization and whether they would be wanting to make those, audit, implementation costs for a particular improvement. So, risk-based approach, along with the focus areas. So, when we are looking at internal audits, a lot of times it happens that, while, being so much engrossed in a particular audit, we end up spending so much time on a particular process, which may be contributing only to a fractional percentage of the overall revenue of the organization. So the planning, uh, the allocation of times of, the internal audit team being spent on a particular uh, audit needs to be planned and assessed basis the risk and importance of that particular audit. So something like, where, I have a revenue cycle which has a lot of value and a lot of stakeholders involved. The management may expect you to spend more time on the, risk-based focused areas of revenue, rather than focusing on, something minimal and well-controlled activity for that particular organization, which may be including, something like an inventory or dispatching process. So, as a internal auditor, whenever we start with a particular audit, we try to understand from the management that what are your pain points. You tell us what are the areas you would want to focus on. Again, I'm not saying that we will go by just that, understanding from the key person, but it will help us plan the particular audit in a way that will also add value to that, key person whom we are auditing, so that the person who is doing it on a day-to-day basis will be able to give you a good perspective. So he would tell you that, madam, I am very comfortable with my inventory management, उसमें मुझे कुछ ज्यादा मिलता नहीं है, but yes, my dispatch is a problem. So I have inventory well controlled, but my dispatch has a lot of lapses which I keep facing on a day-to-day basis. So then this will also redirect your approach on, when you look at the dispatch and you understand what you do, what is happening at the organization, your sample selection, uh, your focus areas will change, has to shift accordingly. So this communication and consistent communication with the key personnel while auditing becomes of great importance here. Now, wherever, there are, so a lot of times we end up having a tiff between the efficiency, the cost, the quality maintenance of a particular audit vis-a-vis, the costs or the revenue of that audit. Now, what happens is that, uh, we can manage the quantification of a particular audit to some extent, but there will still be a certain ratio that needs to be looked at to have a good feel of, population and the way it behaves in terms of the compliance with the processes, etc. So you have to be adaptable to how will it be the most beneficial for the organization and, uh, for the organization and the auditors as well. Now, typically what happens is that, if you do like remote reviews, etc., this may help in certain cases. I'm not saying it will be applicable for all, but in certain cases it may help, you know, uh, the organization have a good review and your costs being managed, because, the organization may end up saving a lot of traveling costs, etc. So these are the sustainable solutions that you may. So, the company also looks at you giving them suggestions if you find some duplication of work, some unwanted activities being done by the, by the personnel of the concerned team in the course of their day-to-day activities, which are any which were taken care of by the by the system, or which could be managed with the system. Correct. So all these need to be kept in mind when we are executing the audits or when we are closing the audits with the management. And the cost efficiency KPIs, like the team cost, the time spent, if there are repetitions of discussions, if there are rounds of sometimes it happens that the concerned departments do not support you with a lot of uh, what do you say, uh, data and etc. So you need to have a plan which you can then map against the standard and be able to kind of justify to the management also that why and where the costing has changed for a particular audit. Now, when we talk about the audits, we also need to have a lot of documentation for our own, papers, wherein if tomorrow we are asked for the efficiency, parameters, whether we have really looked at what we were supposed to look at, whether we have followed all the procedures that needed to be, followed to give a true and fair view of a particular reporting on a particular department or a particular area. These needs to be maintained by us on an ongoing basis. So yes, standardized audit procedures, documentation, reporting tools for faster analysis. So nowadays a lot of reliance is placed on techniques like data analysis, Power BI dashboards. These give you insights on the dumps of the uh, uh, particular data that is shared with the auditors. Now, here also in a recent audit, we've been able to use a lot of data analytics to find observations like, the same invoice numbers were processed under multiple vendors and it was processed with payments. Now imagine if double payments, etc. We are never going to be able to do 100% verification in larger organizations of the invoices. But when we use smarter techniques like data analytics and tools which support data analytics, you can give so much better feedback to the organization in the reports. Right, we were able to find like double payments amounting to about 22 lakh rupees in a particular year. And again, we did it only through data analytics without really vouching, so many number of this thing. So the smarter tools, the smarter techniques helps you maintain both the cost parameters and gives you a better quality measure for giving the report. Um, So wherever there are possibilities of integration of audit systems. So here also, a lot of times you find that being optimistic on the utilization of various what do you say, the various tools. Management ends up spending a lot on multiple tools for various activities. And then when you, over a period of time, when you review the usability and the utility that is being used at the ground level for that particular tools, it's not up to the mark. So you can recommend the duplication of work. So if we have some utilities to maintain, say for example, a common issue found across organizations, as per my understanding, is one of the common issues is that these rate contracts and the agreement management system. A lot of times it happens that एक बार agreement बन गया and then there is no control on the renewals. Now, there are different organizations treating this issue differently, right? But if you have if you've spent on a utility which captures the due dates of the, expiry of the contracts, and if you're not using it for the renewals, then these are the kind of insights that that you are expected as internal auditor to give to the organization. Now, and this I would strongly recommend if it is not being implemented, at I mean, you should give it a try to it when a single auditor reviews multiple departments over a period of time. It gives the auditor a better understanding on how multiple departments function across the organization. And this will also give you a good feel of the governance of the organization, because you will get a perspective of how different departments behave. Okay, sometimes you will find that each individual department is working on solo flight, right? They are not coordinating with the, so some data may be available with the other department. They are maintaining it for themselves also. And some data that they are assuming is not available in the department, they would not even check with the other departments where it is available. So, as internal auditors, and when the same auditor looks at multiple areas, they'll be able to link a lot of things. Like, the accounts will be expecting operations to take care of something. Operations may be expecting that it would be taken care of by the auditors and by the accountants. And when you really speak to multiple departments and multiple HODs and their responsibilities, you will say, "Arey, ye mera responsibility to hai hi nahi." So then you can actually go to the management saying that you will need to reconsider defining the roles and responsibilities for these activities. Now, a lot of times we end up giving a lot of insight, a lot of rectifications on a lot of observations to the organization, and it stays open forever. So, one of the major expectations of the management as a whole, like this, all the stakeholders put together, is they would like to understand that what are the improvements that have been implemented and successfully driven after the audits that have happened. So that is where our action taken reports play come in. So reporting and taking the management action is one, but somebody needs to go back and see that what has really happened after that, and this also needs to be reported to the management, to the board, right? So what happens is it completes the entire loop of and of that particular cycle of audit, and it will give value addition to the client. Now, when you are able to go to the client saying that, "Sir, I reported something last year. The respective department had agreed that this will be done, but now what is happening is that they've done it, but it's not properly and done and not thought through properly, because of which the garbage is in and the garbage is out," is the scenario currently. Now, the management will be very, very happy taking these feedbacks from you, because he would have ask the departments to check ये हो रहा है या नहीं हो रहा है. If it is happening, then he would have not gone and checked whether it is happening properly or not. Correct? So what happens is that closing this entire loop gives the management a satisfaction that yes, the costs that I've spent for audits, whether it is an outsourced auditor or an internal auditor, every organization spends a lot of costs in getting this audits done, right? So these value additions are the justifications that the organizations get, and that is how they will uh, be able to put more reliability on your work, that yes, as internal auditors, they will understand the process, they'll recommend us with what needs to be done, and they will also give us a feedback on whether it has been done correctly or not, right? Uh, we also give, whether the risk has been mitigated with that particular action or no, or there is still some, area because of which the risk will still remain open. And transparency and clarity on what is happening at the ground level. So this is very, very important in terms of, giving an overview to the management that, okay, audits ho rahe hai, the this thing is coming in, or observations are coming in, action plans are being taken care of. Should we assume that it has been implemented? Have you gone back and checked whether the person who said I'll implement so and so going forward, has it been repeated again in the current period? So, these are the perspectives that linking between the last reports and the current reports will help you give a better output to your clients. So for this, some quick techniques would be a detailed action taken dashboard needs to be prepared. which gives quick insights. So one slider on, the presentation that goes to the committee or the board on a periodic basis on what were the high or, important observations and what has happened on it, whether there were any repeat observations that were reported earlier. So, last time they said, we'll take care going forward, and whether it is actually being taken care of or it's a continuous, fallout on it. Then what is so if somebody had said that we'll explore and we'll take a call on it, whether somebody really explored whether the recommendations can be implemented or they've found an alternative. So these are the things that we will also require give the so what needs to be avoided. What
Disha, we are not able
are
to
things?
hear you.
Hello.
Yeah, we are not able to hear you.
Is it better now?
Yeah, it is better.
Okay. So, one of the other things that the management will expect you to take care of is transparency in reporting. What is being dropped, whether, proper judgments and fact detailing has been checked. Like we do not rely on what has been told and explained to us. We always look for, the adequate uh, what do you say? The adequate supportings, the adequate justifications, approvals, whether were taken in case of exceptions, etc. We need to have a proper documentation and recording of everything that we've done on what are the areas we looked at. If we said that the department, so we rate the overall performance of the department at the end of the report, whether given a good or a satisfactory reporting. Uh, for a department which was actually working on a satisfactory basis. So there is a lot of fight here that happens on a day-to-day basis with the various stakeholders. And as an internal auditor, you have to take that judgment. It's a professional judgment that you take on what is, what ratings need to be given, what documentation require for a observation to go off the slide, or whether it will stay on slide with what context. So that documentation and trail of what communication has come to you becomes of critical importance, and especially with the increasing frauds and increasing questions that are being asked to the auditors in today's day, it becomes very, very important. A lot of times you have a lot of pressure from the management that, this cannot go black and white, right? This cannot go to the committee because it will have a lot of implications there. But it's a professional judgment that we take. It's like qualifying the stat audit report. If there is a non-compliance, it has to be reported. It is as simple as it is. So this communication has to be very clearly, sent to the stakeholders that this is what it is, and this is how, as per our professional judgment, with so and so, so and so, so and so requirement will need to be done. Okay, now a lot of times it happens that in the jiffy of doing a lot of things at the same time, there would be like 5 reports happening. If we are not able to take proper follow-ups on the findings, and we might not be able to report on something without the adequate supportings. So that structured follow-ups, structured planning, and work timely reviews become of critical essence here. Like we already discussed, the audit quality needs to be maintained with the structured checklist and uh, allocation of time to the adequate processes basis the risk rating is of critical essence here. So, when a particular evaluation is not adequately monitored or adequately judged upon, it becomes a very difficult situation for the auditor to provide an opinion on a particular process. So this will lead to ineffective audits. A lot of times, you end up in situations where the management at the end of 3 months of a particular audit would come back to you saying, "Ki, but you've not given me any perspective on the critical issues like my revenue leakages. are you sure that the customers are adequately, being given the benefits that they have to be passed on, and whether, there are no frauds happening at the outlets. So, that is where the communication with uh, the primary stakeholders for a particular audit plays in. Now, when you have a timely review and meeting with the stakeholders who are getting a particular audit done for, or who have requested for a particular review, this will help you to understand whether you are on track or there is something that you need to cover before closing a particular audit. And this becomes of essential importance in this case. Now, alignment of audit objectives with organizational goals. So, what is the goal? What is the purpose of a particular audit? Whether the technology that you are using is adequate for commenting on it. So, a lot of times, the management comes back saying that, "Arey, what are you reporting? This is age-old process. ऐसा तो पहले होता था." Now in today's world, nobody is looking at this. Now, this is not relevant. So, for example, pehle, GST before the automated ITC ledgers coming in from the GST portal, earlier there were a lot of issues in, taking the credit where, you had to make sure that the HSN was correctly mapped and all that. But if you are not updated with the current scenario on what the legal requirements are, how have they changed over a period of time, you will lose the essence of what you are saying. So if in today's world, earlier, the cash, uh, uh, I mean, there's some basic checks, where we say that physical sign-ups are required. So आपका physical sign होना ही चाहिए, right, on cash vouchers. But if somebody has approved that on a mail, it is substantially good for it. So before you go with the recommended suggestions or the observations, you have to really sit back and think whether it is relevant in the current scenario for the organization, whether it will really add any value for the department, to follow or not follow it, kind of a thing. So this will typically happen in cases where, we've not prepared adequate plans, we've not, prepared adequate checklist or techniques are identified before we start the audit. So it's usually, I put it this way, that, uh, when you leave for a particular destination, when you leave your house, right, you always know what is your destination, and only then you will have a plan that if I have to go to X location, I'll first take a cab, then I'll, use this route, and then I'll reach by so and so time. That's the planning that you do every time you step out of your house, right? Similarly, for every audit that you execute, you need to first identify your destination, and then, identify the routes that you might need to check during, execute during the course of that journey. It's not an abrupt audit that, okay, I have to do the audit, I'll start it from tomorrow. So a proper planning, assessment, and a proper documentation of all these papers need to be in place to be able to give value add to a particular client. So all in all, when we put all of this together, internal auditing also requires a lot of insight that needs to be provided, objective that needs to be provided, and assurance that needs to be provided. So we are really, putting so many things together just by providing an internal audit report to multiple stakeholders. Now, to provide all these, when we talk about a lot of expectations that come from internal management for the internal auditors, these need to be communicated very clearly to the management also. That if you want us to provide a true and fair view of what is really happening in your organization, we will also require, certain things which will be expected from you. So when we talk about such expectations, it has to be a full and free access. A restricted access will result in a restricted review, which will ultimately result into a restricted opinion on what you will be able to give a opinion only on what you've been provided access to. So if a lot of transactions, if you pull out a sample and the management comes back to you saying that, oh, of this sample of 50 instances, these 10 instances you do not need to look at because this is closely looked at by as in whatever form, and we do not want to share these details with you. It is an alarm there, and this needs to be clearly communicated at the starting point of the audit to the management, that if we are going to have this as a limitation, it will result in a limited review of the this thing, because we are taking a lot of onus on ourselves when we are saying that we'll be commenting on all this, right? Authority to discuss the initiatives. So the assessments and internal controls, they should have the access and authority to talk to various levels across the organizations. So a lot of times it happens that the higher above are not accessible, and this may result in not being able to understand on what is being explained verbally to you, and the scenario that is being portrayed to you, whether it's the actual scenario at a particular workplace or not, right? Um, so other than this, you need to be proactive on your overall review, right? Whether so that there are no last minute surprises. No, if you have an internal audit committee and you go to the management, 2 days before the internal audit committee saying that this is a high risk uh, area that I need to report now, it is going to be a problem for the department, because then you might not have enough time to review all the facts and uh, figures of that particular case. So it has to be well planned. There has to be proactive approach. If there are any findings, it needs to be communicated to the concerned team members at the respective levels at a given point in time, right? Other than that, audits where which are actually practically applicable to a particular business and will help the business in some form or the other, or will help the business not end up into a soup later on. Give a risk management framework, where you can compare on better control perspectives which are available with the departments. Now, a lot of times, having said all the responsibilities and roles that are played by us, there are a lot of myths pertaining to internal audit, saying that, array, you are doing only fault finding. So that rapport needs to be created when you are at a particular organization on the floor. You need to build the rapport with each level at the organization, saying that, listen, while we have a conflicting job, you are there to do your job, and I'm there to check if you've made any mistakes in your job. The overall objective needs to be set very clearly, where we say that it's not fault finding. I'm not trying to, pick on you and, hamper your overall performance at the end of the year. What we are really trying to do is help you have, so if there is something that you're doing which is not even expected by the management, we will step in and say that, this is not expected by the management, and this is something that you do not need to do. And if you're doing something which is taking a lot of pains, then we will step in and recommend the management that these are the changes that need to be brought to in the system. And that is where that entire conversation of, the pain points and management expectations and bridging the gap comes in, right? Yes, the audits have a cost, but if this is properly implemented and effectively executed, it adds a lot of value to the client. It ends up saving a lot of cost for the client. So that is, the perspective with which we should go forward for the this thing. Now, there are various codes of ethics and attributes which are defined by various institutes. The Institute of Internal Auditors, the standards of internal audit, which are uh, given by the this thing, by the various this thing. Again, it always will be based on the basics of the audits, such as the responsibility on what needs to be done, the gross negligence which should not be there, professional judgments, reliance on expertise. Then we also, talk about a lot of quality assurances. You need to have proper documentation maintained. Uh, my experience is that rather than having a report with a lot of observations, when you have a report which have no reportable observations, everybody, including the management to the department, will have lot more questions on what you've done in the audit and what all you've understood during your review. Because the onus is way more on us to justify on what we've actually reviewed over the period of time, and what is it that you know uh, that uh, I mean, it's very difficult for all the stakeholders to believe that there were no reportable observations or there were no any critical observations, like everything is happening very fine, right? I understand it's a difficult scenario, but there could be certain instances where it happens. So in such times, all these standards and the documentation and maintenance of that detailed trail of what has been executed, what has been communicated, timely highlights. So there could be scenarios where you've highlighted observations to the management or the concerned department, but they have given you that justifiable, genuine responses with adequate documentation, because of which it's not reportable for whatever reasons. So that trail needs to be properly maintained, those drop points, that trail. So tomorrow, if you have peer reviews, if you have, somebody who is reviewing whether the internal audits were executed or no, you will be able to justify your activities, your judgment, and your, audit techniques that were implemented for a particular review. And having said that, things like being updated with the laws, understanding what is happening, in the universe, uh, in across the organizations, if there are any industry limitations, any industry specific challenges which is trending, all this you will have to be very, very aware and uh, appraised about at all points in time, because as a professional, that is why you are being onboarded as an internal auditor. So that is the basic expectation, as a client of the stakeholders from you. Now, there are again, there are multiple list of performance standards, with the principles where they define how do you plan an engagement, how what is, how do you perform a particular audit. So these needs, I mean, you need to be appraised with uh, and updated with the changing standards in the current. So like everybody is aware of the a lot of changes that have happened because of the Ind-AS implementation and the rounds of implementation, the phases in which it was implemented. With those, a lot of accounting techniques have changed. Whether with the changing times, these have become applicable. All of us know about the sustainability audits that are now coming in, right? The ESG audit, which is the topic of the day. Now, as a consultant, as an internal auditor, you need to be aware of the basics and what the companies are expected to do out of it. If your company is falling into the category where this is implementable, then it needs to be kind of uh, read up and be this thing by you. I think, Aarti, are there any questions? We can give a open this thing for the question answers.
Yeah, we have few. I'll just read out to you.
Mm-hmm.
Mr. Basant Kumar Mehta, I think there is a comment from him that internal auditors cannot freely work. He has to report to CEO or CFO, then to audit committee. I think these are his views that he has posted. Next is from Aryaman Gautam. Whether P2P and O2C process also be covered in this webinar. So if you can throw light on these two processes.
Sure. So, again, I agree. I think I'll start with Basant G's comment. I agree that there are a lot of reluctances and a lot of practical challenges that we face at the client, and that is where our stand as an auditor comes in. Where we have to, as a professional auditor, take a judgment and a stand where we decide on what is doable and what is not doable. So if you ask me, if there is a lot of pressure, and this happens with all of us on a day-to-day scenario where, we talk about uh, high risk observations or some critical findings going into the report, which will have a lot of implications at various portals for the organization. But again, that is where our independence and our credibility steps in. And we have to choose the clients who are, okay with you working ethically, at some point. So, yes, it's not a cakewalk. It's not easy, but deciding whether to retain a client or, report what is genuinely reportable is a call that we as auditors take, and we as professionals, when we talk about ourselves as chartered accountants, this is a constant conflict we run with. So, yes, it's a practical challenge, and there are ways to overcome it, right? And coming to the P2P and O2C reviews, again, these cycles are very, very huge cycles, and it depends majorly on multiple, how do you put it? Multiple areas and it would be industry specific, but P2P cycles and O2C cycles are the most critical cycles I would put in terms of the manufacturing and trading organizations. Actually, all organizations to that perspective, because this is where the major cash flows are transacted. So, a detailed checklist including various areas that we review. For P2P, there could be from vendor management, vendor onboarding processes till the payout processes. There are multiple standard practices that need to be followed. There has to be detailed mapping. So, I would be more than happy to take a separate session on it because it will be two different sessions in itself. But yes, including your vendor, master controls, or your material controls, your PO processing, your invoice processing controls. There are a lot of controls that can be reviewed in P2P, and for O2C, similarly, what is being accepted, who is being accepted as a customer, whether there are due diligences happening for those. Uh, how is the credibility of a customer enhanced or assessed? These are the bigger questions that you ask yourself when you are looking at the O2C cycle of a particular organization. So yeah.
Thank you, Disha. We'll
Yeah.
move to the next one.
Hmm.
From Mr. K. Subramanian, whether policy decisions come under the purview of the internal audit.
So I would put it this way, that policy decisions would not come under the purview of internal audits, but yes, a opinion on whether a particular policy needs to be updated, or if there is, so say for example, if there are certain clauses which the policy is silent about, or which are redundant because of the time spent on a particular revision. So, some policy is like 2 3 years old, and after that the processes have changed, So we always, have that say on the policy, saying that management may look at, redefining or redesigning the following processes. So yes, while we do not have, the authority to, uh, say that this needs to be changed, it can be brought to the attention of the management, saying that you might need to reconsider these points. These needs to be, designed, and then it has to be left to the management call, basis the business and the costs involved. I hope that answers the question.
Yeah. Next is from Akanksha Sharma.
Hmm.
Thank you for the insights you are giving on this topic. My question is, what are the areas to be taken care of by a CA practitioner while
Hmm.
conducting an internal audit of a foreign entity?
So, internal audit, in my opinion, it depends on the area that you're reviewing, the processes and the logic. So, because internal audit is majorly process driven and logic driven, the logic and the nuances of, what needs to be done in a particular scenario, while that remains same, the statutory applicability of a particular uh, country, whichever the client may fall into, that needs to be studied well, and you need to safeguard yourself on. So either that needs to be limited in the scope, saying that the audit scope will include so and so, so and so, so and so, and whatever is included in terms of compliances needs to be studied well. Otherwise, in terms of, you need to have a good understanding of what happens at ground level at that particular country to have a comment on the observations. Now, for example, in my because I've done a lot of audits for South African companies, I know that that those companies, the way it functions is very, very different than how the Indian companies function. I would say it is 2 decades behind, in terms of the availability of the basic necessities in certain remote locations of these companies. So, whenever we take an audit of a foreign country, you need to understand the basic, uh, because it, again, otherwise it will end up saying, where uh, the basic availability of electricity is limited in a country, and you will, talk about real time updating the systems. It will be a mismatch on the company's expectation vis-a-vis what is being recommended. So yes, whatever country that you are reviewing, you need to study the ground realities, and practical approach will help you give a better output. As a practitioner, that is, I think, what the client would expect from you.
So do you mean we can do internal audit of a foreign entities, or does that question relates to subsidiary or a part of a foreign entity in India?
See, it is again, Aarti, it is uh, depending on the scope and requirement which you are being considered for. So the audits that I'm talking about were financial audits for the companies which are managed by Indian owners in foreign countries. So they
Okay.
wanted a financial due diligence of what is happening in the foreign country because of the limitations. So there are a lot of advisory work, a lot of audits that we can do for multiple countries. A lot of work is being done on implementations of SOPs or drafting of SOPs for foreign country clients. But you will have to first understand the nature of audit that you are being
Yeah.
given, and the expectation out of it, and then your capability and knowledge whether you will be able to do that for that particular country. So there are a lot of factors that will need to be considered.
Okay.
Yeah.
Fine. Next is from P. Prusty. Give some practical issues you identified during the audit that really added value to organizations. I think they want you to share some practical insights out of your practical experiences,
Okay.
which made
So
value addition.
something like I would put it this way, that Um, okay, one of the examples that comes to my mind right now is we were able to identify a lot of revenue leakages for a particular organization. Where the dispatch controls were not happening as per the expected. So what happens is a lot of times, even the basic of the controls that are usually considered as this would be taken care of, ये तो होता ही होगा, right? But if not looked at on a periodic basis, there could be fallouts on that. So I'll give you a particular example. We were looking at the sales revenue of a retail outlet oriented. It was a retail FMCG kind of a client, and we found that there was a fraud being done at the reception, the cash counter of the particular outlet. So it was a camouflage between the multiple team owners, the people present at the shop, uh, who were, there were loyalty programs running in the organization, and which all the customers, the walk-in customers, would not be aware of, right? So, and the people who were at the stationed location were aware of the regular customers of the company. So what they used to do is that they would for the walk-in customers or one-time customers, they would club all the sales in one common account, which was created by them by their own selves. And
Okay.
the loyalty program benefits were carved out of that account by them, right? So when you look again, this was through data analytics that we found out. We were
Mm.
going through the sales revenue details, and we found some abnormalities where same person is procuring uh, all category of materials available at a particular client. And sometimes some basic questions like कोई एक ही customer ये सारा category में fall होगा क्या? What is the probability? And we would have like 100 purchases in a month from the same client, and this was a FMCG retail kind of a outlet, a fashion outlet. So we said it's practically not possible, that one person would walk in so
Yeah.
many times for multiple purchases unless and until he owns a particular. So we
Yeah.
did some, groundwork on it. We did some mystery shopping on it, and we identified that this was a camouflage that was happening within the team. So, every out of the box thinking, every practical, applicability of whether this is genuinely doable or no. Something like this aroused a question for us when we saw that from a 0-year-old infant child to a, utility that would be purchased by a 70-year-old adult. Everything was purchased under the same account,
Okay.
and it was purchased multiple times in a month. So then we kind of questioned whether this is really something that would a genuine buyer would buy, or it is kind of clubbed to gain the benefits. And
Mm-hmm.
you would be surprised to know we found the leakage on these loyalty programs to about 50 lakh of rupees over
Oh,
a period of 2 to 6 months. So we
oh,
were reviewing a 2 month period, and then when we found this, we just did a history check
extended.
of
Yeah.
6 months, and we found it was more than 50 lakhs that was carved out from that same outlet
Okay.
under the loyalty program.
Okay.
So sometimes when you look at things in a different perspective, a different eye will help
Yeah.
uh, a lot of value addition on it. Yeah.
Okay.
So I hope this helps you, with the practical aspect.
Yeah.
Yeah.
Next two members have requested for PPT. One on my part, Disha,
Mhm.
with the growth of AI tools for all areas of practice, what basic tool would you recommend for anyone who is into practice of internal audit? Basic. It's not high
Mhm.
tech or something. Basic tools that they should have in their office, which will help them to have this analysis or analytics things, to
Mhm.
arrive at the calculations?
I think, to start with, and this is my personal take on even my own team, that is working with me, that if people spend some efforts and time on understanding how Excel works and automate the understand the macro automation and, the configured features in Excel itself,
Okay.
there is a way more time saving and analytical approach that can be added to the Excel. So if you're not looking at investing, so of course there are a lot of better tools like Power BI.
Yeah.
A lot of organizations have started using Python,
Yeah.
Power BI. People have started using data analytic tools like IDEA, etc. The foremost basic tool that you can start with is Excel. And if that is also spent time on and well read, understanding all the functions available in Excel, it will be, you will be able to save more than 50% of your time is, my basic take on it. And other than that, there are a lot of add-ons available within the Microsoft
Mhm.
utilities itself. Copilot is one of
Yeah.
the finest tools I know. If you are looking at a data and you add a query on Copilot, it will give you trend analysis by itself.
Okay.
That will also, help you add a lot of value to it.
Okay. Okay.
Yeah.
Fair enough, Disha. We are done with the question answers. I would like to end this session with my thanking on behalf of ICAI to you. It was indeed an enlightening session from your end. We gained
Thank you so much.
remarkable insights into the expectations management has from internal audit and the practical aspects that can help us meet those expectations very effectively. Thank you very much for your time and guidance and thought leadership. A big thank you to the Board of Internal Audit and Management Accounting, ICAI, for organizing this type of session for their continued efforts, providing invaluable learning. Thank you all participants for your enthusiasm and time for the day. And we hope you have a really good evening ahead.
Thank
Thank
you
you
so
very
much.
much.
I would also like to thank the platform for providing this opportunity. And
Yeah.
I really hope that this session would have added some insights on, the practical scenarios that we struggle with on daily basis.
Yeah.
Thank you so much.
Thank
Thank you
you.
so much. Thank you.
Thanks a lot.